I think the one thing that's the most important thing for any corporate or any company, any group, any team is what kind of culture you're developing. That's the one thing that I think you want to do methodically, and that's what keeps a company really alive. I think the exciting thing about New York City is that you always have an investor for any challenge product type, and we gotta be very grateful for that. I do think that there's a bench of investors that's interested in that product type, and not all multifamily was created equal, and not all rent stabilized multifamily was created equal. So there's a bench of investors that are investing specifically in the Bronx and in Upper Manhattan and in B and C class assets and neighborhoods, and they're there for the return and the bases and hopefully the change in legislation. So there is a bench. It's not too deep. I think we'll continue to see investment in that because of the reasons I mentioned, which is the basis and the hope that things will change over time.
Shimon Shkury, thanks for coming on the podcast.
Thank you for having me. That's awesome.
So you're living the American dream. You're running your own brokerage business in New York City. Let's take it back to where you started, though. So you moved to America in '99, I think.
Yes.
And you started a brokerage company called Massey Knakal. A lot of our listeners are brokers, and I just want you to talk quickly, if you can, about some of the early challenges involved with getting into the brokerage business in New York.
Yeah, I think what was interesting for me at Massey is that they gave you the autonomy to canvas an area. And so the first thing I would tell you for me was focus. Really focus on something that is manageable and that you can do. And if you know the Massey Knakal system, it was all about territories. I wanted to do Upper Manhattan. I didn't know anything about Manhattan.
What drew you to Upper Manhattan?
I wanted to do Manhattan, but
Okay.
I knew that below 96th Street is going to be super competitive. I'm coming with my half-broken English and trying to do business here. I figured Upper Manhattan or Harlem, again, not knowing much or anything about it, I would eventually bloom because it's part of Manhattan. And so I was given 96 to 125th, east of Fifth Avenue to begin with, which is East Harlem.
Okay.
And when I say focus, I put the blinders on. And for a period of time, for about 3 months, the only thing I did is went out, that was 2002, went out, took pictures of buildings, came back to the office, took the owners' names, put them in Excel spreadsheets, and built a database that was second to none for that specific location. And once I did that and I understood the comps, I started sending mailings with the comparable sales, which again, at the time, wasn't something that you could get easily, and I got a ton of calls back. So one of the things I learned pretty early on is that my job as a broker or brokerage firm is not just about brokering deals, it's also, and most importantly, advising and being the information agent. And that was like a quick revelation that I loved about this business, and that's how we developed Ariel over time.
Okay, so the territory system's been around for a while now. Do you still believe in that model? I know some brokers do like an asset type focus, or do you still like the model in terms of focusing on a particular area?
I think the model is fantastic, especially when you start in the business. Now, so
Yes.
for our company is focused on origination. We do provide territories for our brokers. And what it means is that they have the opportunity to receive deals coming into their territories, to develop that expertise, and over time originate anywhere. So if they originate anywhere, they can grow and do as much business as they want. The career progression from starting with a territory and a focus has been really good to me personally. And that blew up from East Harlem to all of Harlem, blew up from Harlem to all of Harlem and the Bronx with a team, and eventually to all of New York City through Ariel Property Advisors. So do I think that you should start with a territory? Absolutely. I think that's the right way for you as a younger person to focus, to create relationships, to have the expertise, and take these relationships citywide or nationwide eventually.
Yeah, so a lot of the younger brokers, they sort of struggle to focus on the discipline of having a territory. And what I say is a lot of them drown in opportunity, right? So they just think they can do everything everywhere, but it really, as you were saying, it requires someone to focus on a particular location and become an expert in that market and then grow from there. Well, obviously you've done at Ariel.
If you've been wondering what types of deals we've been working on,
We've made it easy for you. Just click on the link, show notes below.
we're talking real deals and real opportunities.
Whether you're an investor or owner or just curious to know what's going on behind the scenes.
Just click the link below and it'll bring you right to all of our available inventory.
So you started Ariel in 2011?
Exactly. We started in 2011.
So that's a big leap, right? So a lot of brokerages don't survive in this business. That must have took a lot of internal work at the beginning. Do you mind like sharing some challenges you had with early on with Ariel, or not no challenges, but like how that process was starting your own business?
Yeah, I think first of all, it's all about the mindset, and it's the focus, and then it's the people. This is the way I look at the world. When I looked back at what happened and how we did things, it's the mindset, the focus, and the people. While at Massey, I developed a great team with what became my 3 founding partners. 2 starting Ariel, which is Victor Sozio, Mike Tortorici, and Ivan Petrovic. And so I would start by saying that for me, it was all about that, about starting it with the right people. We grew the company to a 60-plus person operation. We're now 7 partners, so we added 3 partners, Paul McCormick, Sean Kelly, and Aviva Viad. And so over time, the one thing I'll tell you is that the people are the most important thing. The challenge for me in 2011 is that, or in general, is growing the business organically. We didn't go out with a lot of money to buy people or buy companies. We really grew it organically, which takes more time. That has been the most challenging thing for us. And over the past 3-4 years, we actually start bearing the fruits of it, or seeing the fruits of it, because people that you hired 5, 6, 7, 8 years ago are now part of the culture, part of the system, have the career progression to become either senior directors or eventually partners. And that's the beauty of growing a company organically. The challenge is it's not as fast. And I'm not patient. So that's part of the challenge I'm having. Overall, we've been prudent and we're, handled the ups and downs in the industry very well. I see a downturn, or every downturn, as an opportunity to grow and grab market share and do better and advise our clients better. This is the time when your clients need you the most. And so that's part of it, right? And part of what we do, I think, very well is taking an advisory first approach.
And one of them advisory things you do is you do a lot of data, right? So you do a lot of research. I think Ariel are known for being probably the best in the business in terms of providing accurate data. So there's a cost to that, right? So how do you like a lot of things in the brokerage business, how do you justify costs, and how do you see a reward based on what that cost is?
It's a great question. Early on, our decision was to centralize everything, to centralize our databases, to have Salesforce in the middle of the room, to have access, every broker that comes in have access to the same information everybody else has, to centralize the analysis and the analysts and the sales support. And we did that because we wanted to develop a culture of one team. And that pays dividends if you do it early on enough, because it's really hard to
implement if everyone's got their own ways. Yeah,
exactly. When you're siloed in an organization that has teams, and each team has their own database, and each team has their own data flow, and so on. If you do it on a corporate level, on a company level, it becomes a lot easier. It goes back to the challenge of growing it organically. We invested in that. So we made a decision that early on, that this is where we're okay investing. And over time, it paid dividends. Why does it pay dividends? Because our ability to communicate better information to clients is heads and shoulders above our competition. Going back to the advisory first approach, if a broker has the ability to show a report and within that report explain the on-the-ground communication they're having with dozens of investors daily and clarify it and communicate it succinctly, that is a value add to the client. Our goal is to empower our clients to make the best decisions. And so through that, I think we're getting an edge. You see it also in our PR. I mean, we're quoted a lot in the papers because of that information. So it has been a great move and a great investment for us. But it is an investment. It's something you have to you have to understand that over time it adds up, and it's something you need to be committed to. But it's easier to develop it when you start it out. It's harder later on, and it pays dividends down the road. You
sound like you're very methodical, as I thought you would be, in terms of growing your business. So you've got to get the right partners in. You've got to have the right information. You've got to have invest in the people. Is there anything else you think you need to do, not necessarily just brokerage, any type of business, to grow the business?
I think so. Our mission statement, which might answer your question, is about empowering people, right? It's about empowering our clients with better information so they can make better decisions. It's about empowering our brokers to have that information to take to their clients. And it's about being involved in the community. I think the one thing that's the most important thing for any corporate or any company, any group, any team is what kind of culture you're developing. Yeah. So we want to develop the best culture we can. And that's the one thing that I think you want to do methodically. And that's what keeps a company alive, really alive. And that's something that you have to work on every single day. And you have to trickle it down. You have to have your management team and leadership team and everybody buy into that culture, talk that culture, work that culture, walk that culture, and try to methodically and intentionally do it. So one of the things we did is a mission statement. The other thing we did is core values. One team is one of them. That's the top. And then you have accountability, commitment, personal growth, innovation, and adaptability. And so we try to live by these core values. And you try to, one of the things that all of our leaders are trying to do is listen more.
Yes.
You gotta, it's hard. When you're a type A personality, sell, advise, you don't want to listen as much. So one of the things we learned is to step back and listen more and try to really understand what the other side is telling us. I think that from a client perspective, you really want to know what the client needs. So you go to a pitch and you're trying to sell your services. But I think beforehand, one of the things you want to do is ask the why. Why is that person needs to sell or refinance, or just understand a little bit more about the motivation behind it, because sometimes that uncovers certain things where you can help that person save some time and save a few months. They might be in a situation they don't know they'll have a 1031 or they have a tax liability. Send them to their accountant. You know how many times we sat in front of clients or heard about clients that are in a C Corp, and without asking the right questions, they wouldn't know that could be an issue for them down the road. So these are the things that I think are important for you to understand the client in a better way. Really try to advise the client as if it was your family member.
Yeah, listen to what their needs are. I think I mentioned you heard that before, and you mentioned a book that I ordered the other day, and I need to read it. It's literally on my desk right now. So thanks for sharing that nugget. So I advise that the younger broker on our teams, particularly with buyers as well, if you're calling buyers with our listings that you're trying to sell, you really need to listen to what they want. Don't call them a 1960s building if they want a 1940s building. So listening is a real key skill that needs to be learned, and it can be learned like any other skill. Another thing that's very impressive about Ariel is you are a boutique brokerage. Would you say that? So, and you punch
say the biggest boutique or one of the biggest.
You're like a boutique
in New York City, but yes.
So but you definitely punch above your weight in terms of you did a $350 million transaction a couple of years ago. So how, if you don't mind me sharing, how did you win that business? I'm sure you had competition with CBRE, JLL, whoever that name your broker. How did Ariel win a transaction of that size?
Well, one of the things we've developed is real expertise in the affordable housing multifamily sector. And one of my partners, Victor Sosier, is prolific in that. And that's how, and relationships. So PRC, the group that you mentioned that we sold this asset for, has been a client for 20 plus years. I've known them for a long, long time, and we've grown with them over time, and that's part of it. But that expertise pays dividends again. When you deal with affordable housing or even rent stabilized here in New York City, one of the things you understand is that it's very nuanced. You need to know what kind of tax shelter or tax abatement you have. What does the regulatory agreement say? What does project-based Section 8 versus vouchers say? What are the different types of Section 8 HAP contracts exist? You need to understand what the city can or cannot do or want to do with you, or the state or the federal government. So once you develop that expertise and once you develop that clientele, it's a lot easier to go and pitch that business. And again, it starts with that advisory first approach. I mean, we get calls. I got a call on Friday from a family member who wants to sell probably a $100 million rent stabilized portfolio. And once you get into the nuances and you bring the right team members into it, it's a lot easier to win that business. But that is really the gist of it. I want to say that we also have a capital services group that I'm very, very proud of, because these brokers have grown a lot in the past few years. They started with $2 and $3 and $4 and $5 million deals, and now they're doing 20 and 30 and 40 and $50 million deals. Again, developing that expertise, be it in multifamily, or we're doing a hotel now, we're doing an office conversion now, but the expertise there is a little different. It's understanding who's willing to land in this market and what type of products. And so developing that expertise, or any expertise, is key, and then you can compete at a higher level.
Thanks for listening to the Broker Brunch. We've now brought you a ton of episodes, and we hope we're providing a lot of value. If you have any ideas of people you'd like to see on future episodes, please drop it in the comments so we can make it happen.
And there's a lot more debt transactions than there are sales, right? So
Correct.
you would think that market has a bigger opportunity.
We think it's, for us, it's a sea of opportunity. And I think that, part of it is because of the support and the centralization that we do, that we have. The other part is the one team approach. If you think about it, we have investment sales brokers that now can talk to mortgage brokers on a regular basis and incorporate them as part of our team. And that is tremendous. That has a significant edge. The other thing that we did last year is we created a strategic alliance with Global Real Estate Advisors, GREA. So now we have 12 locations throughout the United States of offices that do mostly multifamily, and our capital services directors and senior directors can go and transact, do debt and equity in these offices. So that's another growth opportunity. So to answer your question, absolutely growth opportunity for us. We're really looking for great people. One of the things I keep saying to people around me in the office and outside of the office is we're looking for that broker who's been in the industry for 2 to 5 years in a smaller shop, but wants to blow up and grow and have a career progression, maybe become a partner in a company like ours eventually. We're looking for someone who's in a smaller shop or number 2 or 3 and feels they have a ceiling. So we're really in a hiring mode on that end.
Great. So you mentioned your niche of affordable housing. Was that something you strategically thought that you wanted to go after? Because there's a lot of, as you mentioned before, mission-driven capital in that space. Is that something that you thought about, or it just sort of naturally happened selling multifamily buildings?
It's an interesting question. One of the things we've done, or if you look at our progression, it started with Northern Manhattan, continued with the Bronx, as I said before, and then went nationwide. And not nationwide, but also citywide mostly. So one of the things you see is that if you look at Upper Manhattan, they had a lot of affordable housing. They had low-income housing tax credits. They had project-based Section 8. So one of the first deals that we've done was for the Archer company. That was 20 plus years ago. That was a transaction with regulatory agreements and so on, and we sold it. And Vic was also involved in that from the get-go, which was really nice. It's a nice story, actually. But then, we had PRC, we had Omni, we had other groups that gave us that business because they saw that we've become an expert in that. And so as you grow in that location, as you grow with that product, affordable housing product, you develop an expertise. When we moved to Ariel, we continued to do exactly that with L&M, with BFC, and with others. One of the things that happened is another company, a big company, Pembroke, was very friendly. I was very friendly, still friendly with Larry Cohen, and I give him a lot of credit for our business growth. He saw me in one of the events, and one of the things that I recommend everybody, especially young people, go develop something outside of work. Go be involved in things. And I was
not non-profits.
Correct. Yeah. And that's part of, by the way, that's part of our mission. So I was involved in many of those, specifically Israeli related. I love Israel, and we can talk about that forever. I think it's a beacon in a jungle. And we can talk about that too if you want. But Larry comes to me, he says, hey, call me tomorrow. Gives me this guy, call me tomorrow. We know each other, but he's like, call me tomorrow. I call him tomorrow. We set up a meeting. I go to the meeting with Mike Tortorici, one of the founding partners, and Victor Sozio, one of the founding partners. And we get some business for them to evaluate. And Mike, gives me pushes me a little, and I said, what's happening, Mike? He says, you should talk to them about Two Bridges. So that was a deal that they had on the market prior and didn't sell. And I said, Larry, what's happening with Two Bridges, with Cherry Street? He says, nothing. I said, well, we spoke with a group about a week ago that has just raised a Core Plus fund, and we think it's going to be a good deal for them.
Okay.
And he said, who's that? And I said, CIM. And he said, okay.
So that was a unique scenario where you had an ideal buyer for an asset. Okay.
Correct. Vic now gives me 2 more names, right? And so we have 2-3 people, 2-3 groups that we go to, and we end up selling it to CIM and L&M for $280 million. And so you asked about the bigger deals. That's one of these deals that put us closer to the map. Larry and his team hired us to do a lot more business in that category. Fairstead was a buyer at the time. Will Bludgett was one of them. Now he's Treadway. And that propelled to many other deals moving forward.
Because the affordable housing sector has definitely got more visibility and more competition in that sector. Like you see a lot more affordable housing developers that want to be in that space. You also see other brokerages like Newmark have a specialized affordable housing group. So it's interesting how that's becoming very prevalent in today's market, and particularly with like the existing mayor and new potential mayors. They all talk about affordable housing. It's something that everyone talks about all the time. So it's only probably an asset class that's going to continue to grow.
Yeah, I agree with that. I think there's affordable housing that's existing. There's affordable housing, ground up affordable housing, with low-income housing tax credits. And there's affordability of housing, which is really what we need in New York City, which is a little different. What we need in New York City, if you want to talk about New York City, is supply of housing in general. We need free market housing. We need middle-income housing. We need affordable housing. And we need to encourage that. So if you look at it's a very interesting subject because Mayor Adams and Governor Hochul actually understood that and tried to put a housing policy that caters to that. They missed a little bit. They have the 485X that you and I know is great for only smaller buildings, 99 unit and under.
Yep.
Above that, you hit the wage requirements that don't really let you build the right way. And then Mayor Adams also instituted the City of Yes and encouraged housing. But we need to build about 50 to 60,000 units a year in New York City. We're not close. We're about 20 to 30,000 in order to meet demand by 2032. By 2032, the statistics says we'll be short 500,000 units. So we really need to build a lot. Now, we've had several speakers. One of them said, there's 1 million units that are rent stabilized units that got hit in 2019 through HSTPA, and there's 2 million rental units. So half of the rental units are rent stabilized, and about 5 to 7% of these units, of the rent stabilized units, are vacant. Can you imagine if you had the incentive to bring them up to market? Then that's 1 year. That's 1 year of supply that you don't have today because of regulation. So loosen up the regulation, make sure that you encourage more housing. These are the two things that will create the affordability in general. And then you're going to also have to cater to affordable families and so on.
So you mentioned the 2019 laws there. That's the reason why there's so many vacant apartments.
Yeah.
Do you feel, not that you have a crystal ball, but that's really hurt the multifamily, the rent stabilized asset class. Do you feel like there is going to be a change in that legislation?
There has to be. There has to be. So first of all, if you look at rent stabilized housing, it hit the perfect storm. 2019, you have HSTPA. You can't increase rents even upon vacancy. Then you have COVID, collections. Then you have expenses that grew by 54% over the past 10 years. Then you have interest rates jump. And so you see it the same way I do in the statistics, and we just did it in coffee and cap rates. We've seen declines of about 50% on average in predominantly rent-stabilized housing, 75% and above in terms of the units that are in a building. We call it predominantly rent stabilized. So real discounts. Who's buying them? You see who's buying them. The people who are buying them because of the basis, right? They're buying it because they can cash flow today. And one of the things they're saying, and I think they're right, is at some point the city and state will have to come together and say, listen, these buildings are dilapidated. There's a lot of vacant units. We got to do something about it. And it's either providing subsidies to turn these buildings, which are not affordable housing necessarily, into affordable housing. So the landlords will benefit from the subsidies, or provide some kind of incentives very similar to what happened before 2019, where private money can reinvest and get an increase in rents, especially for vacant units. And they're sitting there for no reason to sit there. You want to incentivize someone to put them back online. So I do think something needs to happen. Up until a few months ago, there was not an as of right, but something that you could do. You could go to the city and beg for an Article 11 and maybe get that's a tax shelter, and then get a 610 amendment. And if you had a lot of, units that are Section 8 units, you could increase rents even to supersede the registered rents and so on. So that was a good piece of legislation that went away. So the city's not doing that anymore.
Are they bringing it back, or?
I don't know. I hope so. I don't think it's gone forever, but I don't know. The important part is it was a smart piece of legislation, and it helped. It was helping landlords cash flow. It was helping affordable housing tenants. It was turning rent stabilized buildings into really affordable housing buildings. So it was a good idea that was taken away. So we need good ideas in the city to turn these million units into more productive units for affordable, for free market, just bring them online. And we also need some great ideas to provide more supply of housing in general, building more.
Thank you for listening to the Broker Brunch. If you enjoy the show, please hit subscribe so we can reach more people.
But so one of the initiatives by the government, New York City, was the Rent City of Yes. What you're hearing from clients on that, they think is a good program?
Overall, yes. I think that there's a lot of interpretation that needs to go into it. For example, there is an ability to move air rights in a much more liberal way, which is great. There is an ability to build more in lieu of more affordable housing, which is good, especially when it coincides with the MIH or with the 485X. So there's a lot of good things in that legislation. I do think we need to see more interpretation of that, and I think the professionals are working on it.
Interesting. So the rent stabilized sector, there's still demand to buy these portfolios. Do you think this? I suppose you're selling this asset class, so you would say yes, but do you think it's a good buy? I guess the future will say.
No, I think that you mentioned something that is great, because I wanted to mention it, and you just you just helped me with this. I think the exciting thing about New York City is that you always have an investor for any challenge product type, and we gotta be very grateful for that. I do think that there's a bench of investors that's interested in that product type. And not all multifamily was created equal, and not all rent-stabilized multifamily was created equal. So there's a bench of investors that are investing specifically in the Bronx and in Upper Manhattan and in B and C class assets and neighborhoods. And they're there for the return and the basis and hopefully the change in legislation. But there is also a bench of investors who are invested in 50% rent stabilized units in prime locations, like in Manhattan. We financed several of these deals last year, for example. And that's a specific competitive part of investors. The common denominator is that almost all of them are private family offices, private clients or family offices, not so much institutional. So there is a bench. It's not too deep. I think we'll continue to see investment in that because of the reasons I mentioned, which is the basis, and the hope that things will change over time.
So the private capital can be more patient because the institutional guys need more of a quicker return, looking at IRRs, where a patient person can have a longer term horizon.
That's exactly it, and can make decisions on their own versus fund decisions and so on. So it's not a 3 to 5 year. It can't be a 3 to 5 year investment. It has to be a much longer horizon. I would say 7 to 10 at least. And so that's why it's harder for institutions to invest in it. Also, the hypothesis is that you cash flow today and you hope for better future in a way, and even interest rates, if they come in a bit, that helps rent stabilized housing, specifically very sensitive to interest rate.
It's amazing how much the business and particularly the multifamily sector has changed in the time you've been doing it, right? So people have the business plan. What was it, before 19, that you can come in, turn over the units, and ultimately get some positive cash flow and add value to the building. Now it's really changed, so it's going to be interesting to see what happens over the next 20 years.
I think so. I think you hit on a great point that is interesting, because it changed, and I think that it was very aligned before. So what happened is you saw institutions actually buying complexes of buildings with the notion to rehab them, to get vacancies. Once they get the vacancies, increase the rents and make better buildings at the end of the day. Now, the counter argument to that, these were predatory, opportunistic investors, they were bad landlords, and they weren't. For the most part, they weren't. And so, yes, if you had bad actors, you shouldn't go soft on them, right? But most landlords were great actors, did great for the city, put money into the city based on the regulation in the city. The city was aligned in terms of, hey, you get a vacancy, you can increase the rents by investing in the building, in the unit. I think that was a great thing.
Okay, great.
Unfortunately, he's gone.
So another topic I wanted to touch on was leadership. You are a leader within the New York City real estate industry. What lessons have you learned from leadership? And what have you learned from leadership?
Yeah, I think the listening part.
Yes, you mentioned before.
Right, the listening part, and trying to understand, to really, really understand what the other person is telling you. That's something that over the past few years I've tried to get better at, because I have the tendency, which I'm sure others, to think when people speak, and I'm trying to really absorb what a person says and try to even repeat what they say, so I understand where they're coming from, and take it in. So that's lesson number one. Lesson number two is to provide people with meaning in what they do. I think that's really, really important, and try to make that meaning not fake, real. I mean,
like a purpose.
A purpose, exactly. Yeah. A purpose is like, how can we really help that client? What does that mean for that client when we go in to do a deal with them, or when we provide a service for them? And just think about that. And what is in the best interest of that client? How can we help them get things? So really develop the purpose within the organization. I mentioned culture before. It's key. And really try to think about the interactions I have with people in a more meaningful way. I also try to meet with my partners and the leaders of the company in general periodically, and make sure that we're aligned, make sure that I listen in, and so on. The other thing about leadership is we have a lot of meetings, and I think they're productive. So we have a Monday morning meeting where many people speak. Everybody speaks essentially. We speak about the company. We speak about new deals. We speak about all of the pipeline. That's about an hour meeting. We have a partner meeting right after that, where we speak about things that everybody needs to know and appreciate. We have borough meetings. We have this thing where we're trying to set everybody to success. Not too many meetings, but the meetings that we have are really, really key elements. So in terms of leadership, it's really about culture. It's about listening, and really being there and in a way supporting the organization and the people. So I'm still very involved in client management. I'm still very involved with business development, but my role today personally is more of a support role, right? Most of my people can do business without me, but in many cases, I'd like to support them this way or another, and that's really.
You reminded me of something that Paul used to say. He said, "Servant leadership."
Yes, I like that saying. It's a buzzword, right? Yeah. So how do you translate that into your day to day? How you translate that into the day to day is, hey, Vic calls you up. He says, we need to talk to this client together. Bingo. Or Ben or Matt or any of the other brokers that know that I can be a second voice or can help them listen in, not because I'm smarter, because I'm a second voice.
Yes, yeah.
Right. And so
sometimes it's easier just to step out of you have two heads are better than one, right?
Exactly. And by the way, I do that all the time with Mike, with Vic, with Sean, with Paul, with all of my partners, with brokers. All the time I ask them to join in. And that is for me, that support role, that just being available to the platform, to the people on the platform, to your clients clearly, but really to the people on the platform is the most important thing.
Another thing that comes to mind when you think of leadership is like motivating a sales force, right? But how do you like attract, you're mentioning Ariel are growing, how do you attract and retain talent? And particularly when they're coming out of college, there's no salary in this business. So like what have you learned from terms of attracting talent and getting them to grow within the business and ultimately stay in the business and build a sustainable pipeline of business?
Yeah, I can tell you that retaining the talent is all about the culture.
Yeah.
It's all about making sure that they have the attention they need, right? So Paul McCormick is one of my partners, is managing the Salesforce, and he and us and the whole team and myself, I have a weekly meeting with him. We talk about people. We talk about who's at risk, what's going on with this one, who's struggling. And so really seeing your people, that's the retention. And if we have challenges or we feel that someone is not doing well or something along these lines, who's going to talk to them? Who's taking them to lunch? Who's doing coffee with them? So awareness around that, so that's the retention. Really acute awareness around your people is key in retaining them, in addition to fair compensation, in addition to career progression. clarity, transparency. All of these things are super, super important for retention. So in terms of retention, I think we've done really, really well. We had people leave. They left us either out of the industry or to other jobs in the industry, and very few left to compete, which is really interesting. So it's either we pay too much or we just have a good platform, which makes me feel good about it. The hiring of young people, we realized, is it can't be on a commission based. Just can't be on a commission based. So what we decided to do is hire less, but give them a salary and have a career progression. And so they start as an associate on an associate pool, for example, on the investment sales side, and over time grow. They get a salary, they get a bonus, they get a touch to certain deals, different people. Over time, they move in and work with teams or work with senior brokers or develop their own territory. That's an investment, but it's a worthwhile investment. In terms of lateral hiring, has been difficult for us, but we've got a few really great ones over the years and recently as well. And I think that as our brand and partnership is more visible, and people know it's really a big company that runs with leadership, and it's not just me and Vic and Mike and Ivan and whatever. It's growing, and it'll be easier to have lateral hirings as well. I think the opportunity, once you understand the opportunity within the support within Ariel, the support in terms of the systems, the support in terms of the people, and in terms of the culture, I think you understand that you can develop a real business for yourself there and leverage the platform. That's the goal. The goal is for people to come in and leverage the platform so they can do more business. Yeah,
because there's a lot of pressure on a young person coming in and being expected to originate straight away, and that's why you see such a big fail rate.
We don't expect them to. So if you're young and you're coming to our associate pool, we expect you to learn. We expect you to execute. We don't expect you to originate. Definitely not for a year or two. And so, and that takes the pressure off. You want to develop more. Now you go work with someone. You get less of a salary, more of a bonus, more of a commission, and as you grow, you can start originating and so on. So the expectation, we reverse the expectation to young people in a way.
Interesting. And you seem like you obviously have a great team. One of the things me and my partner have learned about team building is everyone knowing their roles within the team. Because if there's confusion about who's doing what, then that can lead to not efficiency within the system, that ultimately leading to bad execution. So you've seen like you build like everyone knows what they're doing, particularly in the leadership. You have like, seems like Vic spearheading some multifamily portfolio sales. You're overseeing the company. So yeah, any other insights on sort of team building? Did you purposely think that because of someone's personality or skill set, they would better be doing it something else within the company?
I think that the first thing I'd say is play to people's talents, right? So from the top down, you mentioned Vic, and yes, he's doing that. And Mike Tortorici is doing a lot of business in the nonprofit world. He's doing a lot of church sales and other nonprofit sales. And again, it's not like he's just, you gravitate towards that, and people gravitate towards him when a sale like this comes in.
Being known for something, right?
Yes, exactly. Sean Kelly is doing a lot of development and specifically a lot of business in Brooklyn, so he's known for that. You play to the talents of your managers. I mean, Ivan Petrovich is running all of the research and marketing and admin in general. Paul McCormick, as I said, runs our salespeople and Salesforce and help. I mean, recruiting is on his plate. And so you leverage all these different talents. When it comes to senior brokers, based on their areas of expertise, or if that's not an area anymore, product of expertise, or if it's capital services on what they've done and how they can communicate with different clients, you leverage that into the system. So you really want to play to their strengths. So if you know that someone is really, really good at office conversions, you want to feed him office conversion business and so on. If you know that someone is really good at larger deals, hotel deals, ground up construction on the financing side, you want to make sure that you help them develop that expertise. If you know that someone is great in affordable housing financing, you want to make sure that you help them develop that expertise. And so that's what we're trying to do.
Okay. So moving on to a couple of personal questions, if you don't mind. So you've obviously been very successful in this business. You're running a great company. What drives you at this point in your career? We're back. Another season of the Broker Brunch podcast. Summertime in New York. We've got a lot of exciting conversations coming up. We hope you enjoy listening.
It's a great question. What drives me is...
Because it can be tough, right? You know, it's a tough business, right? It's
a tough business.
For as long as you've been in it. What keeps you motivated to keep going and drives you?
What makes me the happiest is to see the machine clicks, to see how people work together. That's
something
really,
you've thought about and had a vision for a while.
Right. I mean, that's exactly it. So the vision, I mean, imagine a big brain in the middle of a room, right? That's our research and sales support and all that. And imagine brokers coming in and taking, information from that brain and communicating it to clients, but also imagine them working together. So for me, seeing that a mortgage broker and an investment sales broker work together on a client and advise them together, and our analyst is participating in that. That's the kind of stuff that makes me tick. That gets me really, really excited. Getting a new hire that I think will do really, really well on the platform gets me really excited.
Because that is unique in the brokerage business. People say that they do it, but not everyone really does do it in reality, in terms of sharing information, having a good culture.
Yeah, and it's still hard. I mean, even by us, right? I mean, we have type A personalities. You always, it's not like it's easy, but when you see it, it's real. So what motivates me is keep building that, and sometimes feeling that the company, knowing that the company is much, much bigger than what it was before, and it kind of runs, the network runs on its own. Also, what excites me is the partnership we have with GREA and taking that to the next level and seeing what that does to Ariel from a capital services perspective, affordable housing perspective, generally speaking, doing more deals throughout the nation. So these are things that keep me super motivated. I got to tell you, I'm very, very fortunate and grateful. I wake up in the morning with excitement to go to work, even when there's things I don't necessarily want to do that day. Yeah. There's not too many days like that, but it's I'm lucky. I'm very, very grateful to do that, and I want to continue to do that. I
think Jeff Bezos says that if you have a job and you enjoy 50%, more than 50% of what you do, then you have a successful job. There are parts of any job that you don't enjoy doing. So obviously it consumes a lot of your life. What do you do to switch off outside of work?
All right. I swim. I do a lot of, I exercise a lot. Okay. So I swim, I lift, I ride a motorcycle.
Nice. What motorcycle?
I have a BMW R1250R.
Beautiful.
Yeah. I just replaced, just traded up. So I do that. I ski in the winter. I love my kids. I have 16-year-old and 13-year-old, and I ski with them during the winter. I have a house outside of the city in Connecticut, which we go to every weekend, my family and I, and I love being there. But I also try to kind of box my life in a way where I wake up at a certain hour, I go to sleep early, I do certain things in the morning. I try to get into good habits of reading and eating and all that kind of stuff, meditating, wrapping up tefillin, which is a Jewish thing, which I love to do every morning. And so really trying to structure my life and then put the work inside that, if that makes sense. Yep. Because I think you want to put boundaries. For me, I want to put boundaries. So I don't work on Shabbat, right? I don't work on Saturdays. Friday night comes in for 24 hours. I just don't work.
I actually learned that from the Jewish community. I didn't do that before, but I did learn that, and it's been very liberating.
It's liberating.
Yeah, it's great.
I've been doing it for almost 20 years. I haven't done it all my life. I've been doing it for almost 20 years, and it's one of the healthiest things I've done in my life. Yeah. The other thing you mentioned, young people. When I was younger, I thought that if I sleep more than 4 hours, I'm lazy. So actually, it's the opposite. So you really want to get some sleep. I'm trying to put in a good 7 to 8 hours a day during the week, definitely 8 to 9 during the weekend. Don't be shy about it. Try to sleep at the same time, but really try to put in some sleep, and exercise is so important. I wasn't always exercising, and I started again a few years ago. Exercise is so important.
So Shimon Shkury, you are the American dream. You're an inspiration, what you've achieved in this business, and please keep doing what you're doing, inspiring the next generation. You've definitely inspired me. So thanks for coming on, and wishing you continued success.
Thank you so much for having me. That's awesome.
Pleasure.